That's usually what happens when you're at the end of a particular market regime. So, you're starting to see the two different narratives fighting for control. And it feels like that's the situation we're in. Doesn't mean it happens overnight. I think market volatility is the outcome for a while longer until people get comfortable with, okay, what is happening? Crypto is similar to growth. It's driven by its own network models and adoption. There's a bunch of other stuff. But similar to that, I said crypto had been trading sideways because wage growth has not kept up with inflation. So marginal dollars to invest by retail has been reduced. And I think that it gets partly caught up in the growth story, but there's no correlation really between bonds and crypto, the dollar and crypto. They're all passing correlations that come in and out. Suddenly the S&P is correlated for a bit and then it's not. So I don't worry about that. I just look at the network effects over time. But if the Fed increase the size of the balance sheet, then it's all correlated because you're lowering the value of the denominator. So that's why when the Fed increase the balance sheet, what you find is that everything goes up. Now, does it happen when the Fed decrease the balance sheet? Are they going to shrink the balance sheet? And does that crash the markets? If they do it, markets will stop going up as much because of the fact that you're increasing the value of the denominator. So it changes that. So yes, we saw it last time around. There was a period of time as the Fed were reducing the size of the balance sheet. No, they kept the balance sheet stable. Stocks were sideways for a while. But then even with a stable balance sheet, stocks took off again because the growth story is still underlying. Last year I had one of the best years I've ever had. And Ethereum, which was my biggest bet, was up 450%. And Bitcoin was a smaller bet, and that was up 60%. And a whole bunch of stuff was up hundreds of percent. And that's not to boast about me. It was about sticking with the plan that I had, and I got the right timing to get in at the right time. So if you remember at the time, I'm a macro guy. I wait for the buses to turn up. I don't try and, I don't try to find every trade. I'm not interested in that. I'm not a short-term guy. So I wait and wait and wait. And I waited for that crypto opportunity. I'd been saying for maybe 2 years, 3 years that crypto and macro are about to meet, and it's going to meet at the next recession. The Fed are going to have to print massively, and this is the time to buy. And I went all in. And I've been talking about the exponential age for an extended period of time now, saying, listen, this is the big trade. The big equity trade here is the exponential age, which are all of these network adoption models of modern technology. So here we are setting up exactly the right trade, which is stuff like ARK or Scottish Mortgage. All of these things, they're all coming to the entry point. Get the entry point right at the maximum point of fear when everybody says, this is terrible. That's the point you can drive extraordinary returns if you're a long-term holder. I love this trade. I love everything about it. And I love it because it came from Real Vision community. So it was this time last year, somebody hit me up with a Bloomberg message that said, I didn't know the guy from a big bank. And he said, I know you love chart. Take a look at this. I'm like, wow, it's this kind of big wedge pattern. I'm like, what the hell is this? He goes, it's carbon. I'm like, tell me about it. What do you do? He was a carbon trader, an electricity trader. So I got him on the phone. He talked me through it. He explained the dynamics, which is that the EU are essentially limiting the amount of carbon availability of credits. And so what happens is they're forcing the polluters to buy more while reducing the supply. I'm like, this looks like a cryptocurrency, right? Where you've got a reduced supply and so they're burning the tokens, and here you've got government mandated demand. I'm like, this is incredible. Who should I speak to? So then second part, he goes, you need to speak to our analyst team. Our analyst team, I pick up the phone to this guy. He goes, hey, Raoul, you know me. I said, how do I know you? He goes, I'm a Real Vision guy who won a competition, flew out to see you and had dinner with you in New York. So he and the Citibank team talked us through the trade. So I put that on Real Vision and where he thinks it goes. And the punchline to the story is a lot higher still to come.
Which is incredible given the gains. What was it, 91% you were up in it last year?
Somewhere close to 100% last year. And his view and my view is over the next 18 months could do the same again. Everything comes down to time horizon. Firstly, don't put too much money in that you can't afford to ride the volatility. I've told everybody this for 2 years now. Expect 50% drawdowns as normal course of business, and not calling it a bear market, just calling it a correction. So that's what we need to deal with, and everybody needs to make their own decision. It's also time horizon. If you think it goes up 20, 30x over the next 5, 6, 10, whatever your number is, well then a 50% drawdown is just small noise on the chart. If you're trading for a 3-month time horizon and it falls 50% on you, well, you've got it dead wrong, because your time horizon is different. So I am looking to add more to my positions into this kind of market, because I don't think anything's changed. Nothing's changed in the network adoption. Network slowed down a bit for the reasons we talked about before. So over time, we see the institutions coming. I'm talking to them every day. I launched a crypto fund of funds. We've already put the first $100 million to work. That goes straight into the markets via the hedge funds. That ongoing allocation of assets is happening. So it doesn't stop. So it trades sideways for a year. That's great. Tends to mean periods of suppressed volatility lead to hyper volatility. Periods of hyper volatility tend to lead to periods of suppressed volatility. We've basically had a sideways market where volatility has been falling since May. We had a big move in the layer ones, AVAX, Terra, and Solana. Usually chasing the previous theme is a way to lose money for the reasons you said before, is you're not taking advantage of weakness. What you're trying to do is follow the momentum in a market where people are just rotating. That's usually bad. You can add to momentum trades when the whole market's in momentum, not when it's rotating. So where could the rotation go? That's the question you should be asking. Well, some of these DeFi ones had a big run in 2020, haven't done anything, and fallen 70%. Maybe it's DeFi. Maybe it's the interoperability, the ones that allow you to move things from one chain to another. They haven't really had a big run. Maybe it's those. Metaverse have had a run, NFTs have had a run, Layer 1s have had a run, Ethereum's had a run, Bitcoin's had a run. So you need to be thinking, okay, what hasn't had the run yet? And again, I wouldn't try and look for one particular single token, because your probability of success, unless you really know it, is super low. Build a basket of stuff, equally weighted, don't take too much risk, wait and see. Idiot like me could get Bitcoin and Ethereum right, but now it's complicated, right? You need to know what you're doing. And, and that's why we did the Crypto Pro, because even I would reaching out to the Delphi guys all the time, saying, well, what do you think of this? What do you think of that? Because it's beyond anybody's ability. Now, they're a big team of 70 odd people who just do this all day, look at different stuff. So yes, it is more complicated, or the other way of solving for it is choosing one focus area that you become the expert on. That's the other way. There's no way you'll be an expert in all of this. You might be okay with some broad asset allocations by using the kind of strategies that I'm talking about, but we're still a bit hit or miss. I mean, I don't really know. So that, I'm guessing too. The opportunity maybe not be here now. The opportunity now in markets like this is to do your homework on what you actually want to do. So we talked about growth stocks. We talked about carbon that's been kind of chopping around a bit in the last few weeks. We've talked about that. We've talked about, is there an opportunity in the bond market on the long side? Maybe there's other trades to be done. So it's the time to do your homework. It's the time to focus on what is my macro view? What am I looking for? What are my signals? What are the chart? When should I get in? Choppy markets are not the time to have high conviction.